Well, let's talk about that, because most of us are taught as kids, probably still today, to save your money, save your pennies and put it in the bank. If you're taught anything about money, I mean, as Robert Kiyosaki would say, schools teach us to be poor, and they usually don't even teach us anything about money, which is crazy because it's something you use more than chemistry and Chinese history and all the other stuff they're teaching us. That's a whole nother conspiracy theory. But most people think, I save my money, I put it in the bank. But as you said, there's inflation, there's taxation, there's money printing. And how do you explain to a normal person that their money's being stolen from them? And the worst thing, Carl, is that it happens to the lower income people more so than the wealthier people. Wealthier people know, maybe I buy assets like real estate or gold. If you're a lower income person, you get a bigger check during COVID, or you get more benefits. You think, oh, this is good for me. When in fact, it's actually even worse for you. But how do you get people to understand that? Because we grew up in a world of fiat currency. I think it was Terence McKenna that once said, I don't know who discovered water, but it certainly wasn't a fish. And we're kind of born into this matrix of fiat money, when in fact it's kind of all a lie. And when you see Bitcoin, you can see it's a lie because it's a parallel universe like in Star Trek. But before Bitcoin existed, it's very hard to get people to see it.
Yeah, so basically this mentality of saving money is something that of course comes from decades ago, when the money was gold, when it really made sense to acquire money, hold it and put it away, because in the future you might need it for something else, right? That's quite basic. That's how money should work. But for that, you need something called hard money, which is gold and Bitcoin and anything else which is hard to produce more of. Easy money, which is fiat currency, which could be the dollar, could be any other national currency. They are not backed up by anything, and they are easy to produce. They are easily dilutable, and the supply expands when they print more. So easy money, hard money. And if you want to save your money into something, it has to be hard money, because then you know that the supply is somewhat protected over time, because it costs money to produce more of it, or time or energy. Like gold, for example, it will cost you time and effort to mine gold from the earth. That's how that works. That's why you don't find gold laying around all around. You know, you can't just go pick up gold from the streets like this, because then it would be easy money. So that's the difference between gold and then fiat money. When you look at Bitcoin, for example, not only is it hard money, because you can't produce more of it above 21 million, you can still mine Bitcoin until 21 million, but up until that point, then it stops. So Bitcoin not only is hard money, but actually, in my opinion, I would like to consider it the hardest money in the universe.
Right.
Because
how do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
there's nothing else in this world which is that absolutely finite. Everything else can technically produce more of it, you know? So gold still has a small inflation. Every year you still see people mine more gold, but it's still so small that it protects the value. It's a very controlled inflation. But even with gold, if the gold price starts surging, let's say like it is right now, then in fact, it will be more profitable for people to mine more, and that should actually increase the supply a little bit faster, so the inflation goes up, and then it could correct the price and make it a little bit harder to keep going up in price. With Bitcoin, that can never happen. because no matter what the price of Bitcoin does, Bitcoin will never go above 21 million. And with Bitcoin mining, there is something called the difficulty adjustment, which is an automatic difficulty adjustment. So if Bitcoin goes up in price and it becomes more profitable to mine, the algorithm itself, like without any human involvement, it will automatically adjust and make it more difficult or less difficult to mine, to adjust for the new demand or the price, meaning that it's perpetual self-fulfilling or self-regulating, let's say, self-regulating. So it's a beautiful invention, and blockchain, which Bitcoin is, the first blockchain, it's a genius way of creating a platform where people can store wealth independently without human involvement or human trust, and you can be 100% sure that that's going to remain there. You don't have to be afraid of dilution or such things. So it's a beautiful thing, and I think it's maybe the most important thing that people should learn about is Bitcoin and how to secure their wealth. And speaking of energy, which is your second question there, everything is energy, like I said, and including money. So when it comes to hard money and easy money, hard money is good at containing monetary energy, while easy money is bad in containing the monetary energy, because when you have a bucket with a hole, it will just keep flowing out, right? You need to have a bucket which is contained, where you put something in and it doesn't exit, right? So that's Bitcoin. You put monetary energy inside, it stays. No one will take it from you. Then, of course, due normal supply and demand, like you have sometimes demand will go up because, Trump tweets about it or something happens. There is some kind of economic crisis. Demand can go up and then the price can go up a lot and then it can go down again. But that's just pure supply and demand. It has nothing to do with the debasement of the currency itself. So that's a big difference. And you will always have volatility with all new interesting things. So Bitcoin will be volatile for the next 10, 20 years probably. I welcome it. I'm fine with it. But people just need to learn what it truly is. And when they know what Bitcoin is, they will stop thinking so much about the volatility, and they will just be happy that they have one Bitcoin. Like one Bitcoin will be one Bitcoin today, tomorrow, next week. That doesn't change.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.